There is the possibility that we're closer to the bottom than we think. If we look back at history, for example, of all the bear markets that we've seen since 1946, we've seen them bottom at about a 25 or 27% decline. If you're looking at a garden variety decline, so that's a decline of 20 to 40%. So we got down about 23%. I know today, after the recent bounce, we're down about 18, 19% on a year-to-date basis. But so we could be closer to the bottom, but it's really going to hinge on what the Fed does, what happens with inflation, and what happens with economic data and the consumer going forward. So that's what we really have to keep our eye on here.
Yeah, and Cleveland Fed President Rhoda Mester speaking to CNBC Europe today, making headlines and using words like painful. She used the term bumpy ride. I mean, you know, Lindsay, Fed heads watch their words really carefully, right? And using words like painful, you don't hear that much from a Fed head. That didn't give me a lot of confidence.
Yeah, I mean, the Fed is so focused on taming inflation. I think the majority of her message, though, was in line with the rest of the Fed speak that we've been hearing lately. It's no surprise when she said she was hoping for that 75% or 75 basis point hike in July. The market's already pricing that in. But more concerning is what happens in the second half of the year. And that's going to depend on inflation. If you look at places like Goldman Sachs, they're expecting inflation to come down over the next several months. But it's really going to end the year around 6% by their estimates. That's extremely high versus historical standards. So for the Fed to tame it further from there, they're going to have to be aggressive. And the one thing that I'm going to be watching is what happens in the August timeframe, because they've got the July meeting where they'll move rates, and they got September. August, they've got the Jackson Hole Symposium, where we'll hear a lot of speak from them about their plans moving forward. And I have to wonder if inflation's going to run hot, which we don't know, and it can. Are they going to do an intra-meeting Fed hike? So that's what I'm going to watch.
Well, that could be the summer surprise, if you will, Lindsay. Listen, leave us with a little reason to be optimistic, aside from the fact that we might be getting close to a bottom. If you're a 10-year or longer investor, I would imagine you want to buy lower, right? I mean, every drop in the past 30 to 50 years has ultimately been a longer-term buying opportunity where you're getting stocks at a discount to what you would have previously paid.
Hey, yeah, I say look at the market's history. It's always recovered from bear markets in the past, right? But you've got to be that longer-term investor. The good news is here, we could be going into a recession. We're already in a bear market with corporations and the consumer in really solid positions. The corporations have more than double cash they had after rebuilding after the great financial crisis. The consumer still has more than $2 trillion in cash on their balance sheets, which they are dipping into to help offset some of these higher prices. But it's a better place to start from than where we started from in early 2020.